have a ton of ideas all at once. So we shall not overcome. You, on the other hand, can overcome, and you can inspire
Good morning, everybody. I was just listening to Henry Rollins. It just reminded me of the old Black Flag days. Anyways, hey, what's up? Hey, yo, let me mark this. Hey, yo, you know this kid? Said I didn't, but he knows he did. All right, so it's 8:02 in the a.m., about an hour and a half before the New York stock market opens. Today is a Thursday. That means, weekly jobless claims? Oh, no, really? Yeah, that's important. So maybe we'll cover that. So weekly jobless claims. It's also the day of the week where we set up swing trades for next week. So on Thursdays, we plan Mondays. Because if you only plan your Mondays on Mondays, you already lost. Cool. So lots going on. It's an important day of the week. So let's get on with it. 3, 2, 1, hit it. Boom. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. G'day, mate. Hey, my name is Wayne McDonald. I am a currency trader. I've been doing this gig for pretty close to 20 years. Not quite. I mean, I've been following Forex for 20 years, and I've been looking at Forex for 20 years, and I traded demo accounts for several years before I quit my job and became a Forex trader. But it's been, 17 years, I guess, maybe, since I quit my job as a VC and became a full-time Forex trader. So I've been following Forex for over 20 years. Interesting gig, man. I love it. So thank you for being here. Thank you for being part of the Forex.Today YouTube community of 17,500 traders. That's really cool. So we gather this time of the day, every single day, with the overriding goal of helping you put together trade plans, thinking ahead, planning ahead, looking at data and making plans, not reacting to news. So anyway, so that's why we're here. So if that's what appeals to you, if you want to learn both technical and fundamental analysis, then ask good questions, take good notes, document these things in the comment section below the recording so that you can have, so you can search your notes and find specific videos that you found helpful for you. So you can tailor make your, and personalize your experience here at Forex.Today. Sound pretty good, right? Great. So what else? I'd like to thank Traders Way for being part of our community. You're going to need a broker. If you're a trader, you're going to need a broker, someone to execute your trades. So therefore, you're probably looking for an execution partner that you trust. So that broker's going to have to earn your loyalty and respect. I'm asking you to visit tradersway.com, open up a demo account, and please give them an opportunity to earn your loyalty and respect. Think about it this way. They value investing in your education up front because they want you to be a better trader, a more successful trader, maybe a trader that takes less risk, that has a longer term point of view, that's more concerned with conservative, repeatable type trading patterns versus some weird, get rich quick, impoverished point of view. So very cool. So fast execution speed, big swaps, narrow spreads. But once again, someone that values you and wants to earn your loyalty and respect. Think about that, tradersway.com. So thank you for being here, and we will take a look. What is going on in the world? Yen still weak. Woohoo! Very nice, very nice. Dollar still weak. Oh, very nice, very nice. Swissy still strong. What are you going to do? So that Swissy is the weird one out still. And that's been about more than 9 months. Maybe a year and a half, huh? It's pretty weird. So Swissy's still doing that thing. That thing. Kiwi still weak, but Aussie recovering. Very nice, very nice. A euro still sort of stuck in the middle. Pound has been strong and hasn't really given much back. CAD has been weak and is recovering. So remember, CAD was weak with a terrible jobs report last week, and maybe is now responding to oil and looking toward the future, not the past. So we'll see. Generally, when I see dollar down and yen down, I think risk on. And right now, there's a little bit of euro, there's a little bit of CAD in the moment. There might be a better recovery or a longer recovery in the Kiwi because it's been more down recently. So if you're thinking up, well, more down might, I mean, you can have too much down. But if it hasn't been too much down, then more down will provide more up because it's got farther to go to get to balance and harmony with the other risk on assets. Okay? Aussie already Oscar Mike. Very, very cool. Pound is pound. You're going to trade pound is pound. Okay? Wait, do you focus on chart of index or the value it lost or gained compared to 100? Well, I'm looking at direction, not value. All right? Because I want to know, I already know what I want to do, correct? So now you have to ask yourself, are the market conditions favorable for that thing I want to do? That thing. So right now, whoa, that arrow's a little big, right? There's a little bit of this, there's a little bit of that, there's a little bit of that, there's some of that, there's some that, there's some that, and there's some that in the context of I guess we'll do this. Okay? And we'll do it this way. So Kiwi's been very weak, but pound's been very strong. Aussie's been very strong. Euro's been neutral. CAD has been very weak, but in the moment, a little up, a little down, a little up, a little up, a little down. So what I kind of see is Aussie has the most continuation. Pound is going to wait. Kiwi is like counter what it's been doing. Euro's neutral to maybe up. CAD is a little counter to what it's been doing. And yen and dollar are weak, which is what we wanted in February and March. Remember that. How many times did I say at the beginning of at the beginning of February, that this could be the beginning of the dollar weakness we know is coming? Is it going to happen a week ago, this week, next week, 3 weeks from now? That's where you need to make decisions. Okay? So dollar has been weak now for a week since non-farm payroll, so almost a week. If that's what's playing, then when are you going to get on the clue train? Okay? So anyways, yen has been weak and is continuing to be weak. Dollar is weak and has been continuing to be weak. CAD is strong, but it's been weak. Kiwi is strong, but it's been weak. So where are you better off? Well, maybe euro is better than Kiwi, and maybe pound wakes up, but we know there's some tops to these. And Aussie is probably one of your better bets. Okay? But generally speaking, if Kiwi is trying to head back up, if CAD is trying to head back up, if euro's trying to head back up, then that's risk on, especially with dollar down and yen down. So that's how I read it. But I don't look at the price. The value, who cares about the value? I don't care about the value. I care about direction. Remember, it's relative strength. It's not a value play. It has nothing to do with value. It's relative strength. Is dollar strong versus Aussie? No. No, it's not. It's not strong versus anything. Okay? Cool. We'll move on to exotics. USD South African Rand now into my weekly target zone. Euro Rand still just slowly eking its way down to the monthly target. So both of them are still working. Fundamentals are still working. I rotated out of euro and into dollar as planned, as discussed all last week and through non-farm payrolls. And now I'm up 1,300 pips. So I made another 150 pips since yesterday doing nothing. Do you see the value creation there? This is what I've been preaching. You don't want to make more trades. You don't want to make bigger trades. How do you make more money? Your trade should be worth more. And we were talking about the difference between income trading and asset appreciation or wealth trading. Wealth trading means you don't get paid for your time. So if you log in every day, make 25 pips, log out, and now you don't have any trades open, you worked and you got paid for the time. Another way, because you can trade that way. I'm not saying that's bad. In fact, you should be very good at that. That should be a skill that you own, right? But at the same time, instead of being focused purely on income today, you can also create wealth. And the wealth, remember, wealth is it's not you trading your time for money. It's not you logging in, making 25 pips and logging out. And you're like, hey, I made 250 bucks. What you could also do is log in, make the same trade, but because you did more work in the planning process, you can see further down the line. And instead of making 25 pips today, you let it run, and over the course of the week, you make 250 pips, but it was the same amount of work is what I'm trying to say. So I woke up this morning on this account with 150 pips more than I had yesterday, and yesterday I made 150 pips more than the day before, but I didn't do any additional work. And for a lot of day traders, 150 pips is a boatload of pips. I can do it in my sleep. Now, it's not me. I made a trade plan. I'm managing the trade. I don't have any risk on these. In fact, on my Euro ZAR, the worst I can do is plus 200. Now I need to move them again, right? So would you move your stop on the USD? It's already there. It's already at break even. Okay. Your question is, should I take profit down here? Okay. That's what you're asking me. And, well, technical analysis tells me it's going to drop significantly more. Okay? Cool. So I could. That would be if I took profit now, that would be a swing trade. Okay? And you have permission to do so if that's what you want to do. Okay? Cool, right? Okay? Yeah, Gary's like, or do both, day trade and let it run. Yeah, well, it's essentially what it is, right? Okay? It's 3 lousy trades, guys. This is why I'm saying, like, I know you can do 1,000 pips a month. And a lot of people are like, oh my God, I never even thought that people actually make 1,000 pips a month. You can say, well, that's only 3 trades. That's only 3 swing trades. I know you can do it. Okay? As long as you have beta. Okay? Remember, beta means the market is moving in general. If the market's not moving, you're not going to do as well because your job isn't to create alpha. Like the market's not moving, but you're going to make a boatload of money. Well, the only way to make a boatload of money when the market's not moving is for you to take additional risk, and I don't want you to take additional risk. Okay? Can rate of change, no, they're different things. No. Relative strength means, is the dollar weak relative to the pound? Is the dollar weak relative to the Aussie? Well, the Aussie, right? So the dollar is weaker relative to the Aussie than it is to the Kiwi, for example, which, right? So it's relative. That's what we're matching, strong versus weak. Rate of change, that's just how fast it's changing, but you're like, what if it's also weak? Like, who cares about the rate of change if you're matching weak to weak or strong to strong or mediocre to mediocre? I couldn't care. That's not what we do. That doesn't make any sense. Who cares? Now, if you're already in the trade and you're trying to say, when should I take profit? And you can say, well, the rate of change has been very, very strong, but now it's seizing up. Well, your oscillators will tell you to get out. Your PSAR will tell you to get out. Your moving average will tell you to get out. Most likely, all of the rate of change and the moving averages and the oscillators and the PSARs are also indicating the same thing, because you've hit some level of resistance or support, which would then create that change in rate of change, or the change in the oscillator, or the change in the PSAR, or the change, you see what I mean? So if you're a swing trader and you sold here, which is very obviously the sell, you're now on target. Yes, you can take profit and feel comfortable, feel happy with your performance. Okay? Do you guys even remember the conversations I had over the course of 2 or 3 weeks where I was waiting for the rotation out of euro and into dollar? I just want to make sure you remember. Do you guys remember that I think the euro rand is actually the mediocre trade on the longer term, and that I want to rotate out of the euro short into the dollar short? Okay? For weeks and weeks. And I said somewhere between February and April, right? Which is another way of saying somewhere in February and March, right? Somewhere between February and March, I want to rotate out of euro and into dollar shorts. But the thing is, I don't know when. So how did we handle that? Now, this might have been part of the swing trading group conversation, but I think it was Kevin that actually asked the question. Like, so how do you tiptoe through that minefield? How do you get on the dollar when the dollar isn't weak? And the conversation had to do with day trading into your swing trading into your position trading. And so that's what I did on the first day of the month. Start planning that rotation, okay? Start planning the rotation. Okay? So, yeah, I sold a test of 15. Lower low, lower high sold. Psych level 15. Okay? You got this. I know you can do this. Now you got to let it run. That's not easy. And remember, I don't even know if this is the move. I said I was very open-minded that this could, the dollar could weaken and then strengthen and then weaken next month. So we gotta be careful, right? Oh, you didn't ask it, Kate? Kevin said he didn't ask that one, but we definitely discussed it. Okay, I thought you did. Maybe it was Gary then. Somebody. Anyways, I know we talked about it, so I know. It might have been the swing group, yeah. Yeah. All right. Commodities. Commodities. Let's do commodities. Yeah, boy. All right. Well, this thing was a beast on a tear. This is WTI. I don't know why there isn't a watermark. Oh, there's the watermark. It was on a tear, and suddenly, for some silly reason, I have it not going up any further. Isn't it nice to know that 24 hours have gone by, and that's been generally true? Yesterday we were here. I'm like, oh my God, this is going to stop moving. I said, everything above this is unpredictably high. Okay? It was improbable to be this expensive based on technical analysis. And therefore, I think it probably won't go any higher. But if it does, those extra, the extra candles have an additional risk attached to them because they're unpredictably they're overbought. So you can wait for the front run. You can wait for the pullback. You could wait for the 4-hour 21, but you should probably wait. So an extra day might be interesting, right? So now, if you're kicking off the 21, that's a technique, right? What happens is you wait for the 21 to catch up. You wait for the 21 to catch up. You wait for the 21 to catch up. And so maybe that's your plan. You see the thought process though? Do you have a plan? Is that what you were waiting for? You're like, actually, I wasn't waiting for anything, but now that you pointed out, maybe I should buy it. That would be the path to bankruptcy. You understand? I didn't tell you just to buy it. I'm asking you to think about it. What was your plan yesterday? Were you a big buyer yesterday? I looked at it and said, no. Okay. So what do you think? So now you have to say, if you're going to be a buyer off the 21, how are you going to play it on the smaller time frame? Okay. So let's do it this way. And now drop into a 15. Okay? Could you buy it off of a 50% retracement off the psych level of 58? Is that what you're going to do? What are you going to do? What you going to do? What you going to do? Shit. Got a pocket full of pips and my homeboys do too. Okay? Is this your plan? What are you doing? What are you going to do? What's your plan? Remember, I don't know what's right. You don't know what's right. So you better at least think about it and create a plan. Okay? Okay? What are you going to wait for? Are you a buyer? And under what circumstance would you buy? Okay? Could you, would you buy something like that? Would you buy it if it goes to 58.5? Or, let's say 58.65 down to 58.5. Would you buy that? On the point of taking profit, can you choose a percentage of profit? I'm not sure if I understand your question. Okay, there's your biddy. So that's what I did for you yesterday. Okay, the actual low is here. Seems to me if you trade Bitcoin, you would have caught that at the London Open. Okay, I think that's pretty simple. Okay, you can see actually it occurred here. Okay, off of that, but I have it here. Okay. You remember it's a front run off of this. So look, it's one of those things. If you're a Bitcoin trader at the London Open, you caught that. You got it. That's all. If that was your job to buy dips, you would have been logging in a couple hours before the London Open. You set it all up. You're like, oh, I'm right in the zone, man. All I need is, all I need is my trigger. All I need is a miracle. All right, double bottom, higher high, higher low, gone. Not a problem. Redonkulous. Okay. Double bottom, higher high. Okay. Higher low. Gone. Not a problem. Down, down, da, 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 da. It's a breakout strategy. It's a London Open strategy. It's a 1, 2, 3 strategy. I don't know. It's whatever you want it to be. Okay. If that's what you wanted, that was clear and you got it. That trade shouldn't be a problem. Okay, now. Okay. Gold. I guess you want to do some gold. Gold. Let's drop out of the daily, drop into this. I don't remember what we're doing here. Let's clear this out. I don't remember this one. Yeah. I'm neutral. I look at this like, I believe in the long term it'll be up, but I'm neutral right now, so just don't even want to look at it anymore. It lost my attention. Can't you see what this trade means to me? Oh, wrong one. Can't you see? Oh, can't you see? All right. All right, so what are we looking at? Scan me, boy. This is 4 hour. Okay. So bulls are buying low. Bears are selling high. So they look at it this way. You're looking at it this way. And you're done. So this chart is set up as a bull because I am bullish. And right now, I'm not upset, and I know there are bears here, but I believe they're going to wimp out. Why do I believe that? I have a fundamental bias. Okay? Oh, I don't take partial profits. Sorry, Stevie. If the trade looks risky, get out. If you're worried about it, take a profit. You got that, Steve? You're like, oh man, we're slamming into resistance. Then take profit. What's up, boss? Where you been, boss hog? Right on. Okay. Can you see that, guys? Pretty standard. On the hourly, it's slowing down a little bit, but you can see, we're working something like this here. And so hopefully, right? Hopefully it's just doing its thing. Yes, it's collapsing, but yeah. Whatever. If I was up for, yeah, but what does that have to do with anything? The percentage you're in, like, why does it matter? Well, but I don't plan on like, I'm going to make $100 and then exit. That's irrelevant, right? Nobody in the market cares or even knows how much return I have on that trade. So right? So I pay attention to things like seasonality, fundamentals, stronger technicals. So like I have a weekly swing trade on that dollar Kiwi or dollar Rand. Yeah, well, I might be able to hold it for 3 weeks. So maybe I look at it from a monthly point of view instead of a weekly point of view. Well, that's a choice I have to make. Okay. So there's the Kiwi returning. You remember we talked about that? It will probably have the most upside because it's had the greatest downside without actually turning bearish. Yeah, no, I know what you're saying, but the percentage isn't the target. So you have to ask yourself, when you got in, what was your target? And then it's completely irrelevant to the percentage. Okay? So by your rationale, let's say, I could argue, you're like, hey, if you're up 1,400%, should you take profit? Well, but under that argument, you could argue that you should get out with 140%. Like 140%! But I'm like, well, I think it'll go further, so why would I get out? Right? So now up 1,400, should I take profit? But maybe nothing fundamentally has changed. Maybe seasonality tells me it hasn't even warmed up yet. So I'd be foolish, let's say, going into, let's say, September, and I'm up 1,400% on a risk-on trade, and you're like, dude, you're up 1,400, and nothing's happened for 3 months, so you should probably bail. Yeah, but I know it's going to go up, and probably go up another 1,400%. So what matters is the plan. Okay? Joe wants to know the website on dairy products. That's the Fonterra. I think it's called Global Dairy something. Here we go. Can't you see? Oh, can't you see what that trade means to me? Yeah. Cool. Okay, dairy prices are up 1.8%. You should be buying the kiwi. Okay. Okay. So since the beginning of November, dairy prices are up. So since the beginning of November, you should be buying the New Zealand dollar. Beginning of November. Beginning of November is right here. So since this gray box, you should be a buyer of New Zealand dollar. It shows up, up, down, up, up. Kind of like this. See, it says in the middle of December, there's a pause. Let me bring this back. In the middle of December, there's a pause, right around the 15th of December. And then 2 weeks later, nice big rally. So if we go back to this, okay, this is when it took off. The middle of December is this period right here. And so dairy prices did this, and then they did this. Nice! Hey, you're welcome. But I've been sharing that strategy now for at least 10 years. Okay, so I'm glad the 5 of you that use it are finding success. Buttermilk powder. Holy. Wow, look at that. Prices are crazy for lactose. I find that intolerable. All right. All right. All right. All right. All right. All right. What's colder than cold? Ice cold. Aussie is Oscar Mike. There's our little trap. Oh, let's go back a little bit. There's our little trap. Okay. What did we discuss yesterday? I know. Right? I know, right? You see that? This is yesterday. Actually, that's hourly, right? So, yeah, I guess there's yesterday during our webinar. Okay. So if I paid you to sit there and stare at it and take the shot, could you do it? What do you think? Theta, sure, you could trade it based on relative strength. Sure. I mean, it's there. I mean, there it is. Dollar's weak, Swissy strong. It's a trade. So here's the euro waking up. Remember what we discussed maybe Monday? Bears would sell it here. Bulls will buy it there, and somebody's going to make money. And then I threw out the challenge to that. Well, Wayne, how do you know it's going to go up or down? And I said, I don't, but you make those decisions now based on your fundamental bias or long-term trend. We know the long-term trend is up. So somebody bought it here because their long-term trend is up. Look, they bought it here, they bought it here, they bought it here, and they're going to buy it next period at the same price. Not the same price, but the same pivot. Okay? You see that? So now we got this and we got this. These are step ups. What's going to happen in the future? Well, next week you're going to get support like that. So between now and Tuesday or Wednesday, you're going to see something like this. And you're like, Wayne, how do you know that? Well, that's what a trend is. If you think it's going to continue trending, that's what it's going to do, because that is what a trend is. Okay? You see? Do you understand? If you think it's trending, then that is a trend, so it'll do some form of that. The thing is, are you going to do that? Which broker do I recommend for stock trading? Well, I don't have your typical sort of brokerage firm, so I guess I wouldn't be qualified to make a recommendation. I don't have a typical stockbroker firm. I have a team, but no. All right. So if you think it's trending up, that's what you do. Okay, so now you're going to have to fold in your weeklies. When do you think the bulk of the offshore US dollars start to come home? You start to come home? I mean, January. Talk about one trading problem with trading fear. Yeah, well, you're going to have to be specific. Oh, my fear is that I will pick the wrong bias for the future. Well, you shouldn't be fearful for that because you're still going to make money. Steve says, Wiley Publishing's book just landed. Right on. I'm sure Wiley Publishing is super excited. But good. I hope my words are helpful. So Daniel, you being right or wrong is irrelevant. Okay? Yeah. Well, and it's not my book either, right? I sold it before it was even published, right? So I am the author, though. So Daniel, being right or wrong is irrelevant. People are not paying you to be right or wrong. They're paying you to make money. Now, okay? Yeah, no, that's fine. So, but think about it that way. So you make a decision, and in fact, don't think of it as being right or wrong. Think of it as you're offering a product. Okay? It's simply a product. Think about it this way. Go to the BMW dealership and buy a BMW. Which one? Well, they have different strengths and weaknesses. So is a 3 Series better than a 7 Series? Is a 7 Series better than an X7? They both have 7s in them. Okay? What about an X1 or X2? Well, the thing is, they serve different purposes and they do different things, and they have the same level of quality relative to the price. And they're going to get the same service, but they're just different, and they provide different sort of utility to different people with different needs. So think of it like, let's say you want to buy the US dollar. So you run a US dollar ultra long fund. And that's what you're going to do. And you will do it. And at the end of the year, there will be a result. It's not that how often you were right. That's the confusing part. That's not how you should be trading. It's not how often you were right. It's the service you provided. So what if clients that invested with you needed you to hedge? And that worked for them. Then that's what they would buy. See, someone will walk onto a lot and buy an M5. Sorry, an X5. They'll buy an X5. They'll show up and they'll buy an X5. Cool. And someone else will say, it's too big. I want an X1 or an X3. And someone else will say, well, I need more. I need more space. I need an X7. So which one is right? The X7, the X5, the X3, the X1? Well, they're different. That's all. So I want you to offer something so somebody can walk up and say, hey, you're doing something that I need. I think the greater sin, Daniel, is someone has no idea how you fit into their portfolio. Okay? oh yeah, no. If you're a bull every single day, you only buy when the opportunity is right. Every single day, day after day, week after week, month after month, quarter after quarter, year over year. Since you're only trading in market conditions that are favorable to your trading, and your losses are tiny and your winners are big, you will be profitable. Now, of course, you'll do better when the market agrees. On the long term, if it's mostly favorable for you, you're going to have a lot more trades than in years that it's not favorable. But you have to look at what you offer as a product. You see that? Why should somebody invest in you? Oh, because like every day I try to do what the market's doing. Okay, well, that's not money management. You are a trader, but you're not providing something that someone can buy. Okay? You see that? Someone's going to come to you because they have a need. They have a want. I want an SUV that holds 5 people. All right, well, forget the X1 and the X3. Can you get 5 people into an M5? Sorry, X5. Can you get 5 people into an X5? Yeah, but you really wouldn't want to. So if you're going to have 5, especially adults, you should get the X7. They're like, cool. Well, the downside to this is you're going to spend a lot more on fuel. And it's heavier and bigger, but you'll comfortably put 5 human beings into that vehicle and everyone's going to be happy. Cool. Well, I'll buy that one then. Thank you. Okay? But what you don't want to do, like there's a movie about the U.S. military where someone wants to make a personnel carrier. I think they're joking about the Bradley. Okay, if you know what the Bradley is. It's a lightly armored personnel carrier. But the Pentagon gets a hold of it and says, well, let's put some rockets on it and let's put a bigger engine on it. And eventually when it's done, it's a heavy armored, not light armored, heavy armored personnel carrier, but because it's heavier, they have to put a bigger engine in it, which means it carries less people. And then they put rockets on it, and then a push bar and a tow bar, because maybe it'll tow and maybe it'll push and maybe it'll fire rockets. And then and at the end, it tried to do everything, but it did nothing well. It only carried 3 people instead of 8 people, and it was slow as molasses. It was a gas guzzler, so it could only go 80 miles. And all of a sudden, it was pointless because so many people did so many things to it and just ruined the whole idea. So I'd rather you specialize, Daniel, and say, Daniel, what is it that you do? I build X7s for BMW. Is it fast? No. Is it fuel efficient? No. But it's got a towing hitch and it's super comfortable, right? Lots of people can sit in it. They're like, oh, okay, well, I don't need that. Cool. Right on. But if you ever need something like that, that's what I build. Okay? If you need fuel efficient, or if you need sporty, or something like that, some other thing, go find that, right? But now you have a sales pitch and you can stand on the stage and say, wealthy ladies and gentlemen and institutions looking for foreign exchange traders, let me show you what I've been doing the last 5 years. If you are worried about the US dollar, let me show you that I have an US dollar ultra long fund. And what this fund will do for you is A, B, and C. So if you are looking for 1, if you're looking for 2, or if 3 describes you, then you're going to be the type of person that will love what we do at danielforex.com. And everyone else is like, well, I'm not really interested in that. I'm in real estate. Well, then go find a real estate fund. But there'll be 2 people in an audience of 200 that will come up to you and say, That was very interesting. That's what described me. Those are my concerns. Let me explain about me. I have a huge part of my portfolio that's exposed to oil or exposed to gold. And because of that, because they're priced in dollars, we face a certain risk, and we think, correct me if I'm wrong, but we think that what you're doing will help us offset our risk. Yes, ma'am, that is true. Then we should talk. Oh, for sure. Okay, and now you just landed a client. Okay? So think of it like a product, okay? Okay? Good. You don't want to try to be right all the time. You have to provide some sort of value to a client. Well, Daniel, you have to decide why those two pairs and what would impact those two pairs, okay? Okay. William, there wouldn't be a reversal if it was fundamental. You have to understand most of what you would be considering a technical reversal would be simply profit taking. So one thing that people confuse a lot is that red candles mean people are selling. That's not necessarily true. If it's trending up, there's nobody selling it. Okay, you have to put that into your mind. How dumb would you have to be as a professional trader that you're selling this? Do you think there's really professional traders with billions of dollars that are that dumb that they're selling this? No. No, nobody's that dumb. So why does it come down then? They bought here, they exited. They bought here, they exited. They bought here, they exited. They bought here, and they're going to exit up there for profit. And the profit taking creates red candles. It's part of the mechanics of the interbanking system. Okay? Okay, you understand that? So you might say, well, Wayne, it reversed here. Okay, maybe that's true. Maybe that's not true. Okay, maybe it's somewhat true. Maybe somebody did short here on the short run. Okay. But I'll tell you, nobody was surprised this went up. No professional. I mean, I prepared you guys for 9 months in advance, 6 months in advance, 3 months in advance, 1 month in advance, the day before and the day after and the day during. Like, there's no surprise there. Okay? So what you said, the key to this, by the way, William, is you said, what kind of fundamental catalyst we look for in a reversal? Well, it's not news, because news wouldn't reverse fundamentals. Okay, like weekly jobless claims won't change anything. It's a data point. Okay? So it's important, but it's not a game changer. So it might take, but what's more important, I think, here is, you see a counter trend at the right time. and there's a buy, and there's a buy, and this one's OOP, so you expect it to come down, which then puts you into here, and then that one worked better. Well, this has a lot to do with seasonality, and then this one takes off, and this goes up, and right, and then it comes back around here, but we expected that again seasonality, and now we're picking up. But what is the fundamental trend, you say? Well, this is the fundamental trend. So what's going to change that? Not weekly jobless claims. Okay? Why even take profit? Well, we talked about that, like why you should exit in there. I said a specific date, in fact. So why? Because A, you will get paid, and B, because of taxes. Do you think these two things are important to a professional or to an investor? Well, we discussed all of that, and I did say it will fall. Okay? Now that that move is over, was it actually bearish? No. It was profit-taking. And we never called it anything else. So I said January, dollar will strengthen, in this case yen. Yen will strengthen. Oh, for sure. But we also know by the end of the year it will be higher. We also said it will probably occur somewhere between the beginning of February and the end of March, and that it'll probably not be average, which would be the middle, let's say March 1st, but it'll probably lean early because of the $2 trillion that the government wants to spend. So it'll probably lean in here a little bit, right? It'll be a little earlier than the average, because the average that we have goes back 20 years. Well, over the last 19 years, we never spent $2 trillion. And remember, it's not that we spent or created the $2 trillion, it's that we expect it to happen in the next 6 to 12 months. So now we have to price that in today. So then I would lean in and say, well, it's probably going to be February. And of course, it's already happened. Okay? This is why in my swing trading group, we explained how to catch this trade by dropping into day trades, but holding them for the month or even the rest of the year. And feel confident enough that you're doing your job properly, that if it does come all the way back down, that's okay too. Because we know we're going to try again in March. This might work. This might be it. This might be the move. We can explain it through all kinds of models, but we ultimately don't know. But you still have to do your damn job. And that was the part I've been focusing a lot on, let's say the last even 12 weeks with the swing trading group. You have to do the damn job. You have to show up at the right time with the right attitude, ready, willing, and able, and you actually do it. The worst sin is not doing it, or even worse than that sin is doing something different. Because you go, oh, but, and then you mess it all up. Just do it. Do your job. Are you a bull? Yes. Is it at M2? Yes. Buy it. Well, what if it comes down and knocks me out for negative 30 pips? So what? Who cares? What's the problem? Okay? You know you have a problem if you take 20 trades in a row and they all lose negative 33. Okay, now you got a problem. Okay. But you got to do your job if you're going to have a chance. Last administration spent money, trillions as well, right? Right? Yeah, the interesting thing, Gennaro, there's still $1 trillion in the account. there's 1 trillion in the account which hasn't been spent yet. We still haven't allocated it. And so the new administration is saying, okay, we already have $1 trillion that we're earmarking. We haven't even cut the check. It's still in cash in an account. We're going to put the money in the economy. It takes a while because there's $1 trillion is a lot. Like, watch Brewster's Millions. After a while, you're like, there's nothing you can buy. You have too much money. So now, while we're trying to figure out how to spend this 1 trillion, we're going to like add another 2 trillion, but we don't even know what to do with this 1 trillion. And that's really the issue. And then if you do read Ray Dalio, he'll tell you when you get to the point where the government simply gives the money to the people for no other benefit, it will create the collapse of society. It's the beginning of the end. And then he goes back 500 years. Every time the government decides to do that, like we'll just give money to people even with no sort of economic impact, it's the beginning of the end. And the cruel example is if people are rioting in the streets, protesting, you give them money and you say, stop protesting, I'll give you some money. And they're like, okay, cool, that's great. And then all of a sudden somebody says, well, what if we riot again? Will they give us more money? And all of a sudden now you're reinforcing the bad behavior in the beginning. And now you're spending money on the riots. And then people realize if they riot more, they can get more money. And you say, well, I gave you $1 billion last time. Well, we want 10 billion this time. And then in the future, now we want 100 billion. And you've never solved any problem. The money doesn't solve the problem. Right? You want to give people dignity. You want to give people hope. You want to give people opportunity. But the money is like the opium wars kind of thing. Like now you're hopelessly addicted to the opium and you're out of work. Instead, what people want is an opportunity to enrich their lives, to have meaning in their lives, to take care of their children, to die reasonably happy. And we all know the money doesn't do that. Money buys comfort, money can be put to work, but free money is worthless. Remember, it's the value created that earned the money that offers the dignity, that offers the respect, that offers a sense of accomplishment. So anytime a government gets to the point where it's just giving money away, typically leads to the downfall. Because at some point, then it doesn't solve any problems, but it actually creates more problems in the long run. And then how are you going to get out of that if you're broke? Because now everyone's like, give me $10 billion and I'll stop rioting. And people are like, well, we don't have any money left. We gave you all the money and now you can't stop. Now you can't stop it. Right? Again, it's kind of like the opium wars. What happens if you get everybody addicted to opium and then you take the opium away? What do you think happens in that situation? Nothing good. Well, money is also very addictive. Right? Money is, right? Money can be deployed to solve problems. Rookie. Okay, money can be deployed to solve problems. Money can be put to work, and the work solves the problems. But money itself doesn't solve problems. Okay? So you're like, oh, you have systemic unemployment. Well, here's some money. Well, that doesn't solve the systemic unemployment. It doesn't solve the systemic racism. It doesn't solve the systemic inequality. So you might as well spend the money solving those problems. Right? It would be better to spend $1 trillion to say anybody that wants to go to college, right, can go to college. It's free. We will spend $1 trillion a year educating our workforce. Okay? And if you're in my macroeconomics course, you know what that means. L to the alpha. That might be better. Anyone wants a job, the government will create a job and pay you for that. That would be a good use of the money. So like what Roosevelt did in the Great New Deal, and we talked about it yesterday, was one of the things they created with that money was the CCC, the Civilian Conservation Corps or something like that. So if you didn't have any money but you wanted work, you didn't get free money, you got work. So the government created this and like, we will build post offices. I don't know if the CCC built post offices, but just go with it for a second. Okay, we're going to build post offices. So if you don't have any work, we're going to need someone with construction skills, with plumbing skills, with electricity skills. It's going to be beautiful. So we're going to have mosaic tile work and beautiful mosaic pictures on the walls. We're going to have hand-carved ceilings because this is the people's house. This is the people can go somewhere beautiful to mail their mail. So they hire all those people. And then other people say, well, I don't have those kinds of skills. Oh, well, we will train you. We will train you. We'll build a school to teach you how to do all this stuff. That's where the money needs to go. And then anyone that wants access to that can get access to that training or can get access to that work. And now, of course, we're not just talking about building post offices, but we can then, what if we trained people for higher tech jobs, right? Like no joke, a friend of mine in her 40s went back to school while raising children, right? And working, went to Stanford University, got a degree in artificial intelligence, not a degree like a graduate certificate, in artificial intelligence. And the exact day she got the certificate was hired by Apple to do artificial intelligence. Well, that's cool. But you know what? It probably cost her 30 grand. Not everyone can work, raise children, right? And have 30 grand to spare and then go to Stanford University in the evenings on the weekends. Okay? But what if you could do it for free? Okay? What if you wanted to become a doctor and you could get through the education and the education would be free, but you would have to work for government medical clinics for 8 years after as a doctor. And then once you're done your 8 years of service now you have 8 years of experience, plus you have your 8 years of education, and you're a qualified doctor with a track record of success. You only killed 2% of your patients, then great. So now you can go start a private practice and, do whatever you want to do. Okay? So you'd have to look at Ray Dalio's stuff and see how he goes back hundreds of years and says, well, when this government did it, it failed. When that government did it, it failed. When that government did it, it failed. And that government did it, failed. So now we got to be careful because we're getting pretty close to doing that kind of thing. Okay? Okay? So we got to be careful is all I'm saying. And I'm not sure how $2 trillion is going to cure COVID. We already have 42 million people vaccinated. Only 20 million people ever got COVID. Okay? So we have 42 million. By the end of the year, we'll have the vast majority of Americans vaccinated. Cool. But we already have more than enough money to do that. We're already well on our way. We're doing 1 million people a day in the United States. Canada's thinking about maybe doing it someday. There isn't even a list in Canada to get on where people in my family in America that are over the age of 70, they're done their 2 shots. They're done, vaccinated, problem solved. So where does the other 2 trillion go between now and the end of the year? Well, I don't know. We already got more than enough. So where does it go? Now, if you want to extend unemployment benefits, especially for waitresses and all that kind of stuff, that's cool too. But as we get closer to vaccination being complete, your herd immunity thing, then all the restaurants will open, all the bars will open. We'll go ape crazy because that's what capitalism does. Capitalism is nuts. We're all going to go to the bars and get ripper drunk and spend $300 each on the first night. Doesn't mean it's good, doesn't mean it's in our best self-interest, but we're going to need a boatload of waitresses. Okay? And now we'll say, well, nobody needs that unemployment. Or it'll dwindle over time, right? So I have no problem with providing unemployment, but at some point, if the money is working, we will have less and less unemployment, right? Because those jobs will come back, and we're already in that process. So what's the extra 2 trillion going to do? That I can't figure out yet. Okay? So once again, I would focus that money. So here's one of the things that we're discussing. Productivity. Okay? Now, I have it equal, but you could do it as a function, right? Productivity is a function of labor plus capital, okay? And you can improve your labor and you can improve your capital through investment. So government's supposed to come in. Here's your government. And they're supposed to tax people. And they're supposed to tax businesses. Okay? So money flows, let's say, we'll do it this way. Money flows to the government, okay, from the business through taxes. But somehow the government's supposed to give back to the people and support business, right? So that we have a good economy. So what if the government then, right? So I'll circle government in green and say, we're going to invest into both improving capital and labor. So one way you could say is free education for anybody that wants it. And if you don't want it, it's your own problem. The second thing is improve technology. So how do you do that? Well, this will actually, here's the interesting thing, and this is going to get too complicated, but if you have an educated workforce that is also entrepreneurial, they're going to find ways to improve capital. They're going to find better ways. They're going to make better technology. They're going to always improve. So if you educate your workforce, they're going to have better ideas on improving capital flows. So then the technology improves, which then makes your labor more efficient. And they get more experience to come up with more ideas. Okay? So the government should be involved. And so to me, the big part that's missing is the government should do whatever it takes to add E, entrepreneurialism. Because it's really land, labor, capital, and I believe entrepreneurialism. If the government can create entrepreneurs and then support, so you create them through education, like, hey, instead of working for a big company, why don't you start your own company? Let me teach you how to balance a checkbook. What percentage of Americans can manage their own bank account? Very few. They should be teaching that in 5th grade. How to be a business, how to manage your business, how to manage people, how to be entrepreneurial, how to solve your own damn problems. Right? So if the government can create that through education and then not just support entrepreneurialism, but get out there and make sure it happens. Small business administration on steroids. An army of entrepreneurials solving their problems, their neighbors' problems, the world's problems. See, the cool thing about capitalism doesn't care what religion you are, doesn't care what color you are, doesn't care who your daddy was. It's like, you got an idea? Let's make that a reality. Okay? So if I was running for government, if I was running for president of the United States, my sales pitch would be absolute, total, radical focus on creation of entrepreneurs, an army of entrepreneurs that solves problems. And you have absolute, total access. My government, will do whatever it takes to make you a success if you want to be a success. If you want to stand up, then we will support you. We will be right behind you one step of the way. And we will create value. Okay? Or you can just spend the money and you'll get no return. Okay? You'll get no return. Who cares? Okay? So I actually wrote, I designed an economic system based on that, by the way. I actually wrote it, gave it to Harvard and got an A. And then the other part was the redistribution of income. I would actually pay one adult in a marriage to stay home and raise the children. Pay them so that it does get counted in GDP. It will improve the productivity of society. And that, right? I actually created that. It was very, very interesting, my argument. So I had to study a lot of different arguments on economic systems. Right? Morgan Freeman, sorry. Freeman, what's his name now? Isn't Morgan Freeman? Who am I talking? Freeman? What's his name? I can't think of his name. Morgan Freeman. I like Morgan Freeman. He's a great actor. Milton Friedman. Milton Friedman had a lot of interesting ideas, but it wasn't quite right. And other people had interesting ideas, but they weren't quite right. But I realized the statistics I saw that when there was an adult at home with the children, they tended to eat better, so they had healthier diets. They had better school attendance. They got immunized. They were more likely to go to university. Yeah, I did, right? And I'm like, oh my God. Right? So if they're healthier, they cost the medical system less. If they're more educated, they're less likely to be in jail, cost society less. But also, if they're more likely to go to college, they can be more productive and produce more. So more productivity and less cost on society, less likely to be on drugs, right? All of a sudden, like, well, I want that as a society. I want less people going to jail. I want less people getting sick and draining the system, less people unemployed. Like, I want all that. And I want more productivity per person, not just less low productivity, but actually more productivity. And so I realized, there you go. The government pays you money to build a society that's stable. And that would get counted as GDP. Because we know people that stay home and raise the kids and do the laundry and pay the bills and do all these things do contribute to the productivity of society. And I'm willing to pay for that. I'm willing to pay a lot of money for that. How about $1 trillion? How about $2 trillion? We can do it whenever we want. Or you can just give the money, and we know the government is a terrible, terrible waste. They will destroy what created. It took generations to create $2 or $3 trillion, and we can destroy it in 6 months. Damon said, what did my professor think? I got an A. There's no A pluses in Harvard, by the way, so I got the highest score possible. There was more to it than that, but that was one piece. Cool, right? So anyways, food for thought. So let's see. I think we did a little of everything. Maybe after the big speech, maybe we'll just call it quits for today. Seems like everything's just doing tickety-boo. So pound kicking off a little bit here. CAD regaining. So you see, it's the catch-up. So the Kiwi, the Euro, and the CAD are catching up, and pound is stalled out, and Aussie's stalled out. But that's kind of what we talked about at the beginning, right? As long as the trend hasn't changed down, then there's going to be a catch-up. The ones that went first have hit their targets, so now the other ones have to have their turn, and there you go. So nice. So if you're in my swing trading group, I will see you this afternoon at 2 p.m. Eastern Time. Looking forward to it. Should be really good. We're going to plan out next week and the rest of the month. So I will see you at 2 p.m. Yes. So peace on earth. May the pips be with you. May your profits be above average. Please click the like. Please subscribe. Please leave comments. And please open a demo account at tradersway.com. See you tomorrow. Cheers.